Hey everybody, James Strait with the North Star Group at Keller Williams here with another Northeast Florida real estate market update. So let's dive right in. You've still got 30-year mortgage interest rates, fixed interest rate, hovering right around that 6.5 mark, just maybe a little bit more. 15-year down at 6.1. Our mortgage partners are telling us on a 30-year mortgage they can get probably closer to 6%. So if you're thinking about making a purchase, give me a call so they can take a look at your situation. Certainly we can put you in touch. We've got bank rate saying that they expect that rate to sort of hang right there. Same 60% of their experts are saying, the same, it's going to stay. And really, when you kind of read down through the details, that has a lot to do with the Federal Reserve saying that that they decided not to raise the interest rate in their last meeting. And but they're still thinking that probably towards the end of the year they may do that again. And pushing back on that a little bit is inflation rates have been a little bit lower, have come down just slightly, so that kind of has caused that stagnation in the rate. But that's largely where it's been most of this year. So aside from interest rates, still a pretty hot market here in Northeast Florida, and I think the big indicator of that is inventory. So we're seeing really kind of still unprecedented levels of inventory. They started to rise as the year went on last year, but we see right after the first of the year that they've fallen, which is what I was reporting on last month. Slight uptick in April, but then right back down in May. And that's causing price increases. So anytime that there's a shortage of a commodity, it causes the price for that commodity to go up, and real estate is a good example of that. And so the price trend tends to be inverse to that inventory level. So where you saw the inventory going up, the price started coming down, and where you saw the inventory come down, the price will start to go up. So we've continuing to see that trend. And again, when inventory becomes lower, same thing. Days on market, homes are available for a shorter amount of time. We're just at 35 days here, average days on market. So that's where we're at with that. I've been having a lot of conversations about really about the strength of the market, and kind of everybody looks back to 2008 and 2010. As soon as there starts to be any uncertainty, that's kind of what everybody just thinks we're going back to. And I've got some statistics here that I think will paint a much more clear picture and a much more optimistic picture of the real estate market. And so what this is some information from Keeping Current Matters, where they're reporting that they've got 32% of homes are owned free and clear, no mortgage. So you got about a third of the population owns their home. You've got another 40, almost 40% that have more than 50% equity in their house. So if they've got a $400,000 house, they owe less than $200,000 on it. And so that's a huge amount of equity. And so 29% of the population representing homes with only with less than 50% equity. And so I think that really is probably one of the most important indicators of strength. You're not going to see massive foreclosures like you had before with numbers like this. And so they had another kind of interesting take on the housing market that I found that I think is really important. The unicorn years, right? So we've gone through, just in general in life in the world, we've gone through a couple really odd years, and real estate was no different. So this kind of calls those unicorn years and says, hey, if we take a look at those and just call them out for what they were and look at the real estate market aside from those, what does that look like? And so they've got these 3 slides on here that I think are really illustrate that point really well. So this is showing traffic pre-pandemic into 2020. And then in those unicorn years of 21 and 22, obviously it was high, but now in 23, we're out of those unicorn years. Showing traffic is still up. And these are national numbers, but so same thing, home appreciation. We saw 2 years where homes jumped in value. My home jumped in value, and so we're sort of back to the other side of that, where we're seeing just that normal kind of steady increase. And then foreclosures. So we had about 600,000 foreclosures per year in the years leading up to those unicorn years. Obviously, during that time, foreclosures were very low because prices were rising so quickly. But now on the other side of that, foreclosures are still very low. And so I feel like that gives us, I think that those are really good indicators for the strength of the market. So anyway, if you have questions about any of this, or you're thinking about buying or selling, I'd love to have my team help you out. Again, I'm James Strite with the North Star Group at Keller Williams, and thanks for stopping by.